This is one of the wildest quotes I've seen in a while. I'm not going to buy any more GPUs until I see the revenue to support it. This is not coming from some fly-by-night company. This is coming from Snowflake CFO, the company that should be investing in artificial intelligence and all of the capabilities that are coming behind it because it's an infrastructure company. But the man making the decisions around how much money they are investing in GPUs in the future, not only isn't buying more GPUs, he's saying that prices are going to come down and he's not seeing actual applications for artificial intelligence in the real world yet. I'm going to get to all of these quotes today because this is a fascinating interview, and it was one of the first times that I've seen an executive talk about the realistic expectations that we need to set for artificial intelligence. Is this something that people are actually using on a day-to-day basis? Is there economic value behind it? I have been questioning this here on this channel, on asymmetric investing, for quite a while now. This is why I'm not buying into the stocks that I think are in an AI bubble right now. But is that bubble going to burst? Let's dig into that. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's get right to these quotes. These are from Michael Scarpelli, and this is at a Goldman Sachs technology conference late last week. He says that there is a GPU shortage around the world, but says in the US, I have no issues with GPUs. They can get plenty of GPUs. Goes on to say, I'm not going to buy any more GPUs until I see the revenue to support it. Why is that interesting? Why is that important? Snowflake is an infrastructure company. So they're going to build out capacity and infrastructure when there's demand for the developers that are using their infrastructure to sell products to end customers. If there's no applications being built that are making money, there's no demand for GPUs, there's no reason for Snowflake to invest in more GPUs. This is something that we've been dancing around for quite a while with artificial intelligence. There's no ROI for artificial intelligence. That has been the concern for those of us that think we're in a bubble. But it was his next comments that I think really drove this home. Jensen Huang was at this conference earlier, and the analyst says that Jensen Huang says that they're going to solve the supply issue with Blackwell later this year in Q4. And Scarpelli says, when they do, I think we're going to see pricing come down. I'm going to come back to that from a financial perspective in a little bit, because not only revenue growth, but gross margin is going to be really important to the companies that are most valued in AI today. But this is the big one. And if you take anything from this video, please take these comments to heart. Scarpelli says, we're in the very early innings. I think everyone is talking about trying to figure out Gen AI use cases within companies, but the reality is that very few are using it en masse today, other than there's a lot of technology focused companies. So basically, technology companies are using ChatGPT, artificial intelligence tools that are coming out today. But other companies, real world companies, retailers, manufacturing companies, infrastructure companies, not using artificial intelligence and Gen AI. And fundamentally, that's where there's going to be a bigger market than what we already have from technologies today. He goes on to say, I was with a big German power grid company, one of the biggest in the world, and they're still trying to figure that out, talking about Gen AI. Later on, he says, as you said, every customer is talking about it, but they're trying to figure out how are they going to use it, talking about Gen AI. They're worried about data. They're worried about the policies that are put in place. So this really pours cold water on a lot of the bullish sentiment around artificial intelligence today. And I think what we need to think about is how much money is going into startups in the ecosystem, venture-backed companies. There are tens of billions of dollars being invested in AI-based venture-backed companies today, whether they're building models or applications, but very few of those companies are actually making money, and almost none of them are making a profit. At the end of the day, if there's going to be a return on hundreds of billions of dollars of investment in GPUs, in AI capability, there has to be a return on investment on an application level, because the application ultimately drives the infrastructure. And this is going to be really critical, because if everybody moves in this same direction that Snowflake seems to be moving, where they're going to pull back on spending, that means that a lot of these stocks are incredibly overvalued, including NVIDIA. Let's look at some of these numbers. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. NVIDIA has had phenomenal revenue growth over the past few years, driven by GPU demand for artificial intelligence applications, for the infrastructure that Snowflake is building out. But look at what has happened to the price to sales multiple of the stock now trading at about 30 times sales. So you have a much higher sales base and you have a much higher multiple. That's why the stock has done so well. And look at those margins. Now operating margins of about 62%. Now go back to those comments that Scarpelli made earlier. If pricing starts to come down for H100s, for Blackwell, what if suddenly we're not getting an operating margin of 62%? We're getting more of a traditional operating margin that NVIDIA would see historically at around 30, 35, maybe even 40% on the high end. That is going to be a dramatic impact on their bottom line. So we may see revenue growth slow. And historically, we have seen NVIDIA actually see revenue decline in their down markets. I don't think we're seeing signs of that yet, but that's very possible eventually over the next few years. But that revenue growth could slow, margins could compress, and that would likely drive the market to compress multiples. So price to sales multiple, price to earnings multiple. NVIDIA has to do a lot to grow into the current valuation that it has as a stock. As I'm recording, the company's worth $2.9 trillion. That is an incredibly high valuation for the revenue and earnings that it has coming into the business. So a lot of growth is being projected and a lot of really high margin growth. Let's look at another stock that was really driven by artificial intelligence. That is Super Microcomputer. You can see that revenue grew tremendously over the last couple of years. You see margin expansion as well, just like we saw at NVIDIA. But what's happened over the past few months? Investors are expecting less growth. That means that price to earnings multiple starts to come down and the stock starts to drop. We have seen this at Super Microcomputer. We have not seen the same thing at some of the bigger players like NVIDIA. But is this a canary in the coal mine? I think it absolutely could be. If we hear in third quarter earnings reports from the big tech companies that they are going to pull back on spending, even just maintaining spending where they are, it means that demand for GPUs may not be growing at an exponential rate like it was over the past 18 to 24 months and could lead to a massive drawdown or drop in values for some of the big AI stocks. Something to keep an eye on and pay attention because this is Snowflake CFO. He is making these financial decisions to buy GPUs and literally says, I'm not going to buy any more GPUs until we see revenue to support it. That indicates there's not a lot of real revenue coming in from AI applications yet. Doesn't mean there won't be eventually, but it means this bubble may need to pop before we get there. Let me know what you think about this in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.